Today we are diving into a topic that affects every citizens and businesses in India: taxes. Understanding taxes is crucial for effective financial planning and compliance. In this comprehensive session, we'll explore what taxes are and their purpose, the various types of taxes in India, the difference between taxes on goods and taxes on food, recent updates and changes in the tax system for 2025. So without any further wait, let's get started with the section number 1. Section number 1 is what is tax? Taxes are mandatory financial charges imposed by the government on individuals, businesses, and other entities. They serve several key purposes like revenue generation. It's funding public services like healthcare, education, and infrastructure. Redistribution of wealth, reducing economic inequalities by taxing higher incomes at higher rate. Economic regulation, influencing economic activities such as discouraging harmful products through higher taxes. In essence, taxes are the backbone of a functioning society, enabling the government to provide essential services and maintain economic stability. So the section number 2 is types of taxes in India. India's tax system is broadly categorized into two types: direct tax and indirect taxes. So first we are going to talk about on direct taxes. Direct taxes are paid directly by individuals and organizations to the government. For examples, income tax levied on individuals earning. India follows a progressive tax system where tax rates increase with higher income bracket. For the financial year 2024 to 2025, assessment year 2025-26, the new tax regime slabs are as follows: up to 3 lakh, that is nil; 3 lakh to 7 lakh, that is 5%; 7 lakh to 10 lakh, 10%; 10 lakh to 12 lakh, 15%; 12 lakh to 15 lakh, 20%; and above 15 lakh, that is 30% of tax bracket. And we took this information by the Economic Times. Now let's talk about corporate tax. Charge on the profits of companies. The rates vary based on the company's turnover and their criteria. Capital gains tax imposed on profits from the sales of assets like property or stock. It can be short-term or long-term, depending on the holding period of the asset. Now let's talk about indirect taxes. Indirect taxes are collected by intermediaries like retailers from the consumers and then paid to the government. The primarily indirect tax is the goods and services tax, GST, which has sums many previous taxes like VAT, service tax, and excise duty. GST is comprehensive multi-stage destination-based tax applied on the supply of goods and services. The GST rates are categorized into different slabs. 0%, it's on essential items like fruit, vegetables, and certain food grains. 5%, items of mass consumption including packaged food items. 12%, processed foods and certain electronics. 18%, majority of goods and services including smartphone financial services. 28%, luxury items and sin goods like automobiles and tobacco products, and it is a source by Max Life Insurance. Understanding these categories helps in grasping how different income sources and expenditure are taxed in India. Now let's talk about the section number 3. Section number 3 is differences between tax on goods and tax on food. While both goods and foods items fall under the GST framework, they are taxed differently to balance revenue generation with public welfare. Tax on goods. Standard rates. Most goods are taxed at 12%, 18%, or 28%, depending on their classification. For example, luxury item attracts higher GST rates of 28%. Now let's talk about tax on food. Essential food items, basic necessities, unprocessed cereals, fresh fruits and vegetables are exempt from GST 0% rate to ensure affordability. Now let's talk about processed and packaged foods. Items like packaged snacks, ready-to-eat meals, and branded cereals are taxed at rates ranging from 5% to 18% based on their degree and processing and branding. Recent updates in 2024, the GST Council introduced specific rates for items like popcorn, leading to public debate. For intense, non-branded salted popcorn is taxed at 5%, pre-packaged branded popcorn at 12%, and caramel popcorn at 18% due to added sugar. These designations aim to keep essential food items affordable while generating revenue from processed and luxury goods. Now we are going to talk on section number 4. Section number 4 is recent changes and updates in the tax system for 2025. Staying informed about the latest tax development is crucial for compliance and financial planning. Here are some notable updates for 2025. Income tax reforms. The government is considering reducing personal income tax rates for individuals earning up to 1.5 million annually to boost consumptions and elevate the financial burden on the middle class. The proposed change aims to stimulate economic growth by increasing disposable income. GST compliance enhancement. Starting in 2025, mandatory multi-factors authentication (MFA) for GST portal access, and restrictions on e-way bill generation are being implemented to curb fraudulent practice and enhance compliance. GST rate adjustment. The GST Council has made several rates adjustments, including increasing the GST rate from 5% to 18% for items like scrap and polyurethanes, and from 12% to 18% of pans and packing containers. These changes reflects the government efforts to streamline the tax system, enhance compliance, and adapt to evolving economic conditions. Understanding the tax landscape in India is essential for every citizen and business. Tax funds public services, influence economic behavior, and play a pivotal role in the nation development. By staying informed about the types of taxes, their implications, and recent changes, you can make better financial decisions and ensure compliance with the law. Thank you for joining us in the comprehensive overview of India's tax system. If you found this information helpful, please like, share, and subscribe for more insightful content. Feel free to leave a question and comment below, and we will be happy to address them in future videos. Stay informed, stay compliant, and I'll see you in the next video.